on the way up and on the way down as well. And I mean, Dixon, Amber, Keynes, everything came up. But these are small recoveries, 4-5% after the falls that we've seen lately. But I mean, it's, but it's good because we just had a one-way kind of a free fall, and that kind of got arrested. So yesterday on the Nifty, at least we crossed 23,100. Today we ended above the 23,200 mark. And again, it's slow, it's tentative. I mean, everyone kind of looking over their shoulder whether there is another wave of selling. And generally, I mean, if you to speak with market technicians and those who look at price charts and that kind of thing, the consensus is that, well, the broader trend is still down. It's not turned up. And eventually around 23,400 or so, you'll see another wave down. But, consensus is consensus, and markets typically don't go that way, and they find a way to do something else. But having said all of that, I think generally a better session, much better session. Broader market breadth was much better as well. So lots of groups of stocks which saw some recovery. But I would still say you've got to just take it day by day because, it looked very, very precarious and looked like it would go straight, break 23,000. We did break 23,000 and go and sort of made a new low. But so far over the last 2 days, actually today and the last 1 hour or so, we've managed a slightly better showing. So 23,205, the close on Nifty today. Rima.
The Nifty ending above the 23,200 mark. On the way up, it's Ultratech Cement, Grasim. IT names like Wipro, Tech Mahindra seeing buying. And then auto names like Aisha and M&M. On the way down, BPCL and HUL ending lower post their numbers. Kotak Mahindra Bank and Axis Bank. The Nifty Bank also ending with a cut of more than 100 points, 135 points lower. And Reliance Industries fell nearly 1%, exerting its pressure. Let's tell you what we have for you on our show today. We start with the top movers and shakers of the day with Vivek. IT stocks in focus, particularly mid-cap IT names. Zensar, Coforge, Persistent taking the spotlight on the back of Q3 numbers, and Ultratech Cement was the big winner today. We'll get you the key snapshot of all the earnings, and then we'll tell you the key events to watch tomorrow. But first up, it's over to Vivek now. He's at the big wall with the top stock movers.
Well, thank you so much for that. A much better day compared to the kind of sell-off that you saw yesterday, and the breadth too very strong. First in the list of gainers has to be the entire cement pack after the very strong set of numbers that came in from Ultratech Cement, up over 6.5%. All of the cement stocks today managing to end with strong gains. Grasim, Ramco, Shree Cement, all of them moving higher in the session. The next set of stocks, something that you alluded to earlier, is the entire mid-cap IT space. A lot of these stocks doing very well in the session. Persistent Systems, Coforge, Zensar Technology is the one that we're discussing. Birla Soft Emphasis, all of these stocks ending with very, very sharp gains. From the cable and wireless, wired companies, a lot of these companies that actually saw a bit of a sell-off today saw a sharp rebound. KEI Industries, this particular name, a relative outperformer versus peers, ended higher by over 8.5%. From the insurance pack, Go Digit, very strong set of numbers. Non-motor insurance growth growing significantly over there, and that stock, one point of time, was pushed at the upper circuit, cooled off a little bit towards the last hour of the session, but over 12% higher. And lastly, Pidilite, inline set of numbers, underlying volume growth, very strong over there. Stock ended higher by over 5%, but quite a long list of losers as well. BPCL, the top Nifty laggard, expectations were that it would be a good quarter for the company, but very high LPG under recoveries and earnings disappointed the street. From the cement pack, while most of the stocks did quite well, Nuvoco Vistas, this particular stock, kind of disappointed and spent most of the day under pressure today. And Tata Communications, one of the top laggards as far as the F&O space was concerned, and this particular stock too cooled off quite significantly in the session. Tata Communications is the one that we're discussing.
Let's get in Ambareesh, Baliga and Ruchit Jain of Motilal Oswal Financial Services joining us on the show. And Vivek, thank you very much for that. Ruchit, do you expect this recovery to continue in the, at least in tomorrow's trading session? What's the price action telling you?
Hello, everyone. Well, if you look at last three and a half months, our markets had primarily collected when the US 10-year government bond yields have gone up along with the dollar index. But in last 3 or 4 trading sessions, we have seen a cool off from the highs in 10-year bond yield as well as in the dollar index. Now, if you look at the Nifty chart, the Nifty is trading around its trendline support, which is around 23,000 to 22,900. So I think from a risk-reward ratio perspective, the downside seems to be very limited from a near-term perspective. At the most, this 200, 300 points down move could be there, but the kind of positioning that even FIs have, with about 83% positions on the short side, and with some cool-off seen in the bond yield and the dollar index, we are of the opinion that the markets are set in for a pullback move before the budget. So the downside, I think 23,000 would become a good support base, at least for timing. Too early to call it as a bottom, but at least a relief rally could be seen in the near term. So we are advising traders to look for buying opportunities now from a short-term perspective, maybe till the event, at least for next 1 week's perspective, where we could see a rally first towards 23,500, followed by 23,800.
Okay, and Ruchit, quickly just list out the names. We'll talk about those in greater detail, but what's the best way to play this move that you were expecting?
Also, I think large or mid and large cap names would take the leadership. And amongst these, if I just have to choose some, then Bajaj Twins looks quite possible, quite positive, because in the recent corrective phase, we have seen a good relative outperformance where the market was falling, but Bajaj Finance, Bajaj Finserv have not seen any price-wise correction. The up moves have also been supported by good volume. So, Bajaj Finance can be bought over here. We expect target somewhere around 7,800 on the higher side. Apart from that, IT names have already been doing well. So I think IT would continue its leadership on the higher side.
Okay, Bajaj Twins, IT maybe. We'll come back, Ruchit, in a bit. Now, Ultratech was turned out to be the stock of the day, and it started late but ran ahead and quickly so, reporting a good set of third quarter results. Nigel is here with details. Nigel.
Well, Ultratech's numbers were blockbuster, actually. It came out in late trade and it surprised the street positively. So, give you a few numbers. On the top line itself, there was a beat of close to around 150 crores. The encouraging part, though, was on the EBITDA performance, and that beat estimates were close to around 100 crores, better than expected margins and profitability as well. How come they came about this beat? Couple of factors. One is on volumes. The growth was close to around 10%. The street was bracing for a number of around 8 to around 10%. So that came in at the upper end of what the street was working with. Next up, in terms of realizations, it is expected to be a bit softish. Quarter on quarter, it was, on a year-on-year basis. And on a year-on-year basis, it was down by close to around 10%. While on a sequential basis, well, it was down close to, it was up by close to around 1.5%. So that was par for the course. The reason for the beat was better than expected volumes, and energy costs did cool off for them. And that's why, in fact, the street liked it very much. In addition to this, the management was quite confident. They said that urban as well as rural demand will come back. Government's focus on capex as well will help. And that's why they're talking about a 7 to around 8% volume growth going ahead. So put everything together. Big beat in terms of profitability. EBITDA per ton improves by close to around 250 rupees per ton. The street liked those numbers. Send the stock flying higher. Back to you.
It's 6% higher, 7% higher on Ultratech. Ambareesh, a quick word on Ultratech and the rest of the cement pack from here.
I mean, like I was talking about earlier on the same subject, I think it's a great time to look to buy cement companies because going ahead, at least the next foreseeable next 4 quarters, I really see the execution taking off as far as the infra projects are concerned. So I think there'll be a decent volume growth for the cement companies. But then more importantly, I think we'll also see margins like coming back to normal. So that should be a big booster across. And other than Ultratech, I would surely look at Nuvoco, which again had come out with decently bad results. So it has disappointed, but I think it's an opportunity because going ahead, I think the next 3 to 4 quarters should look better for Nuvoco.
Let's get to the mid-cap IT sector. Stole the show, names like Zensar, Coforge, Persistent. And here it's on the back of numbers. So let's get to them. Zensar reported growth in Q3 versus expectation of a revenue decline because for the last 2 years in Q3, the company has been reporting negative revenue growth on account of furlough seasonality. So this quarter, 0.7% sequential revenue growth, 7.5% on a year-on-year basis, and the highest ever order book. The street rewarded Zensar. But the other two names, Persistent and Coforge, deserve mention because these are outperformers not just in the last 1 year where stocks have risen nearly 50%, but over the last 3 years where names like Persistent have gone up by nearly 180%. And the reason is quarter after quarter, these companies continue to deliver on growth. So while the rest of the large cap and even some of the largest mid-cap IT companies have reported growth rates which are flat, 0.1, 0.2%, Coforge tops the chart with an 8.4% revenue growth. Their organic revenue growth was more than 9%. And you have Persistent in a difficult quarter reporting a 4.6% revenue growth. The sustainability, the fact that these companies quarter after quarter continue to give you robust sustainable growth is why they're trading also at very expensive valuations compared to the rest of the pack at about 40 to 50 times PE, much higher than the rest of the IT pack, which is at 20 to 28 times. Also, the prospects for these companies are very strong. Coforge is confident of sustained robust growth. Persistent is now calling out a $5 billion revenue target by FY31. So they're laying the roadmap for continued growth, at least for the next 5 to 6 years. In fact, let's listen in to one of the managements, the CEO of Coforge, Sudhir Singh.
ये परफॉर्मेंस जैसे आपने शुरू में भी बोला था सिर्फ इस क्वार्टर में सॉलिड नहीं रही है पिछले 7 साल का रिकॉर्ड हमारा बड़ा रोबस्ट है ग्रोथ डिलीवर करने का पहली चीज हमने इस क्वार्टर में 4 लार्ज डील साइन करें दूसरी चीज हमारा नेक्स्ट 12 मंथ साइंड ऑर्डर बुक आज इस क्वार्टर के एंड पे $1.37 बिलियन है जो कि इसी क्वार्टर लास्ट ईयर के मुकाबले 40% से ज्यादा ऊपर है.
That's the Coforge CEO saying the order book for the next 12 months is up 40% on a year-on-year basis. But Ruchit, a quick word on the charts of these IT companies, mid-cap IT, anything that you like?
I think all three companies have very strong price volume action today. And in fact, even if you look at the medium-term trend, then the trend seems to be quite strong. So I think that Coforge is the strongest one because if you look at the recent past as well, the price up moves had good volumes. On corrections, we don't see any volume-based sell-off in the stock. So I think it's just a continuation of the uptrend that we can see. And if one can see it from a bit mid-term perspective, maybe next 1 quarter or so, then we can expect levels around 10,300 to 10,500 on Coforge.
So Coforge is the best placed because you were saying IT is maybe a hunting ground for ideas. Ruchit?
Yes, I think IT, if we look at the entire IT pack, then there has been a good relative outperformance when the other segments in the market were in a corrective phase. And what we can see that when the results are good, the price volume action is quite strong over there. So this clearly indicates a good buying interest over there. So yes, this outperformance is likely to continue in the IT space.
Okay, Ambareesh, anything interesting out of the space? IT?
Yeah, I think both these stocks are quite interesting, Coforge as well as Persistent. And I mean, clearly they're getting that premium due to the sustainable growth which they have shown. And now with the things looking up for the IT space overall, at least the foreseeable 4 to 6 quarters are looking extremely good. I think these are the ones which will lead. But then something like a Coforge, the way it has moved up today, I would possibly wait for some correction before I get in.
Okay, all right. Now, another story. Karnataka's governor has returned a minerals rights tax bill to the state government, seeking clarification from the state. Sudarshan is here to tell us why this is important for names like NMDC, JSW, even Vedanta. So take it away.
So last month we had reported that Karnataka government has passed mineral tax bill mentioning 2 major clauses. First one was retrospective tax on mineral land and mineral rights, and that would be implemented retrospectively as per Supreme Court order. And second, Karnataka government's plan to increase the duty on mining. Now we have been communicated from Karnataka governor's office that Karnataka governor has returned the bill to government asking certain clarifications, and these clarifications have been sought after some of the mining associations have approached governor raising certain concerns on these 2 major clauses, that was retrospective tax and increase in duty. And after this, governor has sought clarification. Remember, few weeks ago, even Union Steel Minister S.T. Kumaraswamy had met Law Minister and NMDC discussing this issue and how to convince the state government to take this bill back, because as per Steel Minister, if Karnataka government goes ahead and increases the duty, it will impact both mining companies and steel companies. Stocks that will be in focus, first one is NMDC, because of total mix, 35% is formed by Karnataka. Second, JSW sources major quantities of iron ore indirectly from NMDC. And third, Vedanta and Sandur Manganese are 2 major producers. But lastly, keep this thing in mind. It's a normal process for any governor to send the bill back if he or she needs certain clarifications from the government. The only reason we have been highlighting this because this bill is very important for these mining companies.
All right. So thank you very much for that. It's the center. Governor one side, state, of course, on the other side, different governments as well, the center and, of course, the state of Karnataka at this point in time. Ambareesh, any quick thoughts on the story?
Yeah, see, I mean, the tax on mineral rights was a major negative, and because of which we've already seen most of these stocks correct, including NMDC, which was affected decently badly. So if there's a rethink or a dilution on that, I think that should be positive. So I really don't see much of a downside from here. But in case there's a dilution, I think we can see a decent bounce back.
Okay, all right. Stocks actually, I mean, names like NMDC, etc., have come off pretty sharply. High was $100, 70 odd rupees now. So yeah, I mean, have taken a bit of a knock, even names like Vedanta, etc. Well, Ambareesh and Ruchit, thank you very much for joining us. A quick chat there on a variety of stocks and sectors. We take a break. We are back after a quick break. We'll tell you the corporate voices that you heard through the course of the day here. We'll tell you the events to watch tomorrow as well. Stay tuned.
Welcome back. You're watching Markets Forward, and in our corporate corner today, first up is BPCL. The management anticipates a slight premium for crude due to the Russian sanctions, and they could have to pay an extra $2 to $3 per barrel. The company did see an improvement in gross refining margins despite volatility and refinery shutdown, which they expect to end this fiscal year with gross refining margins of $6.50 per barrel. Further, they are also hopeful of LPG under recoveries being compensated by March.
Okay, well, next is Polycab. The management says that Q4 is typically better than the other 3 quarters. The switch gear segments are more profitable compared to others. They've also guided for between 11 and 13% EBITDA margins for FY25.
And before we wrap, we'll bring you the key market events to watch for tomorrow. Abhishek is here with that.
Well, Rima, to begin with, RBI will be giving out data with respect to momentum of business for banks. So bank loan growth and deposit growth data will come out. Deposit growth last time was around 9.9%, while credit growth was around 11.2% last time around. Forex reserve data will also come out. Last time it was around the $626 billion mark. Watch out for USA existing home sales. That is estimated to come out at 4.19 million versus 4.15 million last time around. Stock that will go ex-dividend, DCM Shriram interim dividend of rupees 3.6, and stock that will see its face value get splitted is Insulation Energy from rupees 10 to rupee 1. Results season is going on, so watch out for key results tomorrow. Shriram Finance, JSW Steel, Godrej Consumer, AU Small Finance Bank, Torrent Pharma and Credit Access Grameen. Watch out for results on Saturday, the big one being ICICI Bank, IDFC First Bank, Yes Bank, SBFC Finance, as well as JK Cement and Macrotech Developers. Back to you.
All right, Abhishek, thank you very much for that. So it's going to be another sort of, it's going to be a packed Friday, let me put it that way, although it's the last day of the week. Well, it's a wrap on this edition of Markets Forward. But as we go, let me leave you with Growth Code, a collaborative initiative by Grow and CNBC TV 18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we help traders understand the difference between high-frequency trading and algorithmic trading.
Algorithmic trading and high-frequency trading, or HFT as we know it, they're often confused, but they're different. They use computer algorithms, both of them, to execute trades, but the key difference between the two is in speed and strategy. On the one hand, algorithmic trading uses algorithms to automatically execute trades based on set rules like price, there could be volume, time. It aims to trade efficiently to reduce human error and improve the accuracy of those trades. Now, this can involve various strategies such as order routing, market making, or even arbitrage. It's commonly used by institutional investors, hedge funds, and some individual traders as well. High-frequency trading, on the other hand, is a subset of algorithmic trading focused on executing trades at incredibly fast speeds, sometimes making millions of trades in fractions of a second. The goal here is to capitalize on any tiny price movements that last just nanoseconds or microseconds. The main difference here is speed. Algorithmic trading can execute trades at various speeds, but HFT is all about speed, processing thousands of trades every day. HFT targets short-term gains by exploiting small price changes, whereas algorithmic trading may involve fewer, slightly longer-term trades. Is it suitable for retail investors? Well, for algorithmic trading, it is accessible by various platforms offering automated trading tools, making it useful for individual traders. However, HFT typically requires massive investments in technology and resources, making it out of reach for most retail traders. In short, HFT is a fast-paced subset of algorithmic trading, which encompasses both short and long-term strategies. In short, all HFT is algorithmic trading, but not all algorithmic trading are HFT.